All right. Good morning, good afternoon, depending on where you're tuning in from. My name is Patrick France, Senior Instructor here at VectorVest. Hopefully everyone is doing well. Hopefully you guys can hear me out there. If you can, let's see some VV Nation showing up in the chat. I know the alert is set up to go out any moment now, so we should be seeing a lot more people just coming in here in the very near future. But for right now, welcome everybody. You guys are the first, so glad to have you here. Good morning, Jay, Rodney. Hopefully you guys are doing well over on our YouTube side. Eric tuning in from the UK, loud and clear. Thank you for that, Eric. Give me 1 second. I just want to go ahead, turn on my do not disturb mode, so that way I don't get any notifications why we're going live or why we're going over this here. So once again, welcome everybody. This is our weekly mobile coaching session where we talk about the VectorVest Stock Advisory app. Now, the VectorVest Stock Advisory app is by far one of the most comprehensive trading apps available to you to help you manage your portfolio and make money consistently in the market. So if you guys want to learn more about it, as always, make sure to tune in every single week for these sessions because we cover what's hot, what's not, new functions, new features, which we have a special one hopefully coming out next week. I don't want to give too much away, but next week should be a interesting stream that we have planned for you guys. So I'm looking forward to that one. Good morning, Drew. There's that VV Nation in the chat. Love seeing it. Good morning, Martin. Hopefully you guys are doing well. Looking over at our YouTube or our Facebook side, we should be live both on YouTube and Facebook. And I see Jay chiming in with the VV Nation over there. So thank you, Jay. Glad to see you in both here. So once again, welcome everybody. This week, we're going to be focusing specifically on dividends. It's something that we've been talking about as a company here over the last few weeks. If you've been following along with our strategies of the week that we do for you. And so I wanted to take that idea and go over that with the mobile app. So that way you guys can have everything you need to, be prepared and really use or get the most functionality out of the mobile app here for you. Hello, good morning. And Danny, good morning. Hopefully you're doing well here. All right. So with that, as always, if you're brand new and you want to see your stocks analyzed, make sure to stick around towards the very end where we'll analyze any stock in less than 10 seconds using the Stock Advisory app. Also, as always, if you guys haven't already, smash that like button. I see new people starting to come into the room, just like expecting that one there. So if you're just now tuning in, as always, make sure smash that like button. That helps us out with the YouTube and Facebook algorithms and helps continue to grow this awesome community and continues to show support for these live coaching sessions and doesn't cost you a thing. So if you haven't already, make sure to do that if you enjoy these coaching sessions on a weekly basis. All right, so with that, what we're going to do is we're going to take a look at what's going on in the market here today. Then we'll dive into our topic of discussion. Then as always, like I mentioned earlier, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So with that, let's go ahead and jump right into the mobile app here. So starting off at the very top center, as we can see, today's market is mildly bullish and VectorVest advocates caution when buying stocks at this time. Now, as we can see, we are one tick into the green in that gauge there. And as we know, the gauge gets its colors from the top row of lights in the color guard. Now, the color guard is where we really start to see the analysis on the overall market here. So the first indicator we look at is the price, which is talking about the price of VectorVest Composite. If you're not familiar with it, if you're not already a subscriber, the price of VectorVest Composite is an arithmetic indexed average of about 9,200 stocks out there. And this gives you a better representation on what's actually occurring in the market because it's not just looking at small subsections such as the Dow's 30 or the Nasdaq's 100 or even the S&P's 500, but it's taking into account 9,200 stocks out there. The next indicator we're going to look at is the RT or relative timing, which is looking at the short-term price trend of the market. Now this is cast on a scale of 0 to 2, and above 1 would indicate that the short-term trend is up, below 1 would indicate that the short-term trend is down. So as we can see, we are currently below that level of 1, so therefore the short-term trend of the market is still down. But when we look at the day over day and week over week trends of this, we can see that we are improving, starting to move higher, giving us some positive signs for the overall market here. And then the last one we're going to take a look at is the BSR or buy to sell ratio, which is looking at the number of buy rated stocks and comparing it to the number of sell rated stocks in the market. So as always, VectorVest gives a buy, hold, and sell rating every single day. And if there's more buys than sells in the database, then the buy to sell ratio would be above 1, which would indicate overall market strength. And if it's below 1, as it is now, that indicates there are more sells and buys or overall market weakness still. But once again, here at VectorVest, we consider ourselves to be trend followers. So let's look at the trend. We're higher day over day and week over week. So we are improving on our conditions here in the market, but still not getting to that point that gives us, a lot of confidence behind the moves currently. So we're seeing some positive signs that the market may be starting to reverse course or starting to improve, but still after the markets that we've had over the last 6 months, we still want to make sure that we err on the side of caution here. So after that, the trends of these three indicators are comprised daily to come up with our MTI, or the market timing indicator. Now, the market timing indicator, once again, is cast on a scale of 0 to 2, and it's looking at the underlying trend of the market. So if it's above 1, the underlying trend of the market would be up, and below 1, the underlying trend of the market would be down. So as you can see, the underlying trend still remains down currently, no surprise there. But once again, let's look at the trend. We're improving day over day and week over week. So we are seeing improvements in the health of this indicator, but not quite getting to those levels yet. That indicates that, the underlying trend is now back to up here. So after the MTI, as always, we then get the trend column, which shows 2 parts of the trend each and every day. Now, the first part is referred to as the primary wave, which is just simply the short-term or weekly trend of the market. As we can see, it is up since the price of the VectorVest composite is higher than it was compared to 5 trading days earlier. The second part is just simply looking at the MTI, or the underlying trend, and since the MTI is below 1, the underlying trend of the market will remain down here. Then after that, we then get the calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system. They're our last signal we get to get in and our last signal we get to get out. So therefore, you should never ignore a confirmed call change. And looking at it here, no surprise, we still remain in that confirmed down situation as of today. Hey there, Michael. Hey, Maria, Bob, Drew. Hopefully you guys are doing well. Man, Drew coming in with the VV Nation. Love seeing that. Welcome, everybody. I see a lot of new people tuning in right now. So as always, if you're brand new or if you're just now getting here and you haven't already hit that like button, go ahead, do so right now. That helps us out with the YouTube algorithm, shows support for our channel without costing you a thing. So if you haven't done that already, make sure to do that as well. All right, so as always, let's take a look at the advanced declines and then the major indices to see just, finishing our round on the overall market today here. So right now we're sitting at about 54% of stocks moving higher and about 32% of stocks moving lower. When we look at the advanced declines, typically we want to see a 2-to-1 bias in a certain direction. So since the market's moving higher, we want to see twice as many stocks advancing than declining. Right now, we're not quite at that level yet. Now, conditions could improve. We could see this change by the end of the session here today, which we'll take a look at before we end. But right now, we're not really getting that confidence that, if we entered a trade, the probability is in our favor that trades continue to move higher here. And then looking at the major indices, the Dow's down about 0.5%, NASDAQ's up just shy of 0.5%, S&P 500 down about 0.1%, VectorVest composite up about 0.6% actually. So markets are improving. Dow and S&P a little lackluster currently, but the NASDAQ, which has been one of the most beaten up indices of the big three, really starting to come back a little bit here today. So nice seeing that. It's been a long time since we've seen that. Also, hey there, Jim. Good morning. Hopefully you're doing well. All right, so with that, let's go ahead and dive into our topic of discussion here today. So as I was stating at the very beginning, we are starting to, or if you've been following along with the strategies of the week over the last few weeks, we've been talking about dividends. In these current market conditions, if we're seeing, sideways moves or slightly down moves, dividends can help supplement that return you're getting on an investment. And that way you can generate some income without having to worry too much about the capital appreciation aspect. Because with the markets going down or seeing this extreme volatility, it can really help, ease some of that volatility, because you're not worried about the day-to-day movements. You're worried about the longer-term movements, and you're also able to, once again, supplement some of that income through dividends rather than trying to supplement that income from the underlying asset appreciating here. So VectorVest makes it extremely easy to find dividend stocks if that's the stocks that you're looking for, or if you're wanting to add some to your portfolio to help boost your portfolio's performance here with this craziness that we've been experiencing. So what we're going to do is we're going to jump into the stock pick ideas down here on the left. There we go. Waiting for it to pull up. And then the section we're going to be focusing on here today is retirement stocks. So we've talked about a lot of these different sections over the last few weeks. And this time we're going to be focusing not on the safest stocks, which we've definitely referred back to many, many times here. Not the overall top rated stocks, which are, top VST stocks, but the top dividend stocks. Now, if you're a desktop subscriber and you're wanting to know where do I find these top dividend stocks inside the VectorVest 7 software, this does come from the DRIP 25 plus list. So if you're not familiar with it, DRIP stands for dividend reinvestment plans, and 25 plus indicates that these stocks in this list have been growing or increasing their dividend year over year for at least 25 years, if not more. So the first one, and you're going to see a lot of stocks that have been big popular stocks this year, mainly commodities coming up to the top, such as petroleum stocks. Looking at the very first one, we got ExxonMobil and Chevron. The great thing about VectorVest is it gives us the power of the VST, so that way it does a lot of the work for us. Instead of just getting a whole list of stocks and having you have to, make your own or go through the analysis, do all that analysis on your own, VectorVest does all that work for you and brings the best potential candidates to the top and then the worst ones at the bottom. So right now, what we're going to do is we're going to take a look at Exxon and we'll just work through the analysis together here, make sure everybody's on the same page. So as you can see at the bottom, right below that little mini graph there, we get 4 indicators. Now these 4 indicators are all going to be cast on a scale of 0 to 2. And above 1 is good and below 1 is bad. As long as you can remember that, VectorVest is going to make your investing life a lot simpler. So the first one we look at is the RV or relative value, which is looking at the long-term potential of the stock over the next 1 to 3 years. So with Exxon, with an RV of 1.55, that tells us this stock has good long-term potential over the next 1 to 3 years. The next indicator is the RS or relative safety, which is looking at the consistency in their fundamentals. So, is the company growing their earnings quarter over quarter, year over year, etc. Another way of looking at it, though, is it's simply a risk indicator or a risk factor. If the RS is above 1, that would indicate less risk compared to the average stock out there. And then below 1 would indicate more risk associated with it compared to the average stock out there. So looking at Exxon 1.06, it is better than the average stock out there. So a little bit less risky than the average stock, good long-term potential. Now let's take a look at the technicals or the RT, which once again is looking at the short-term price trend here. So above 1 tells us it's in a pretty strong uptrend right now too. So therefore this stock has good long-term potential. This stock has less risk associated with it compared to the average stock out there. It's in a pretty decent uptrend, especially for the fact that it pays a dividend. Also, overall, this stock is definitely favorable. But since we're focusing on dividends here today, let's scroll down a little bit and take a look at that dividend information. So first and foremost, I know a lot of people bring this up week in and week out, talking about making sure that you're finding stocks that are undervalued. So the top dividend stock and one of the hottest sectors right now is currently undervalued. The price is trading at about 97.37. The value currently is 113.01. So you're getting a discount on this stock, plus you're getting a dividend. Let's take a look at the dividend. So the dividend, getting down there, is 3.52. Now, whenever you see this dividend being displayed here, it's always an annualized dividend for anybody that's not familiar with it. So when you see that 3.52, that's over the course of 1 year. Looking at the dividend yield, 3.62%. Not a bad return on a stock that's undervalued and has been making money on the capital appreciation side as well. Plus, on top of that, you're adding that extra bonus, once again, of getting that 3.62% every single year so far. There's a lot of people out there that would, kill just to have be ahead 3.62 or 3.6% so far for the year. Because with the current market conditions, a lot of people have lost a lot of money. And this way, it could help you avoid those kind of situations going forward if you haven't already started considering this option. Then we get into the dividend information. So the dividend yield we talked about, 3.6. Dividend safety on a scale of 1 to 99 at 60 tells us it's pretty strong or safe dividend, meaning less likely to have any sort of dividend cut. And then we look at the dividend growth, 9% a year, not bad. But once again, this company has been consistently growing or increasing their dividend every single year for at minimum 25 years. So these are the kind of companies, if you're looking for strong dividend players, this is a good one to consider adding to your radar here. So let's go ahead, now that we know that one, let's go take a look at the graph real quick. So we'll tap on the chart at the top, because as always, a picture is worth 1,000 words. And before you ever buy a stock, you should always take a look at the graph to make sure that it looks favorable to you as well. So as you can see, I have the buy, sell, and hold rating bar at the very top. And then we see the price shown in candlesticks. We have a 30-day weighted moving average on our chart currently, and then the MACD here at the bottom. So looking at it, when you're looking, this is over a 6-month time frame. I'll zoom out so you guys can see it a little bit better. And then what you're typically looking for is a nice steady rise in price from bottom left to upper right. And then also, if you're looking for, consistency, you could look at earnings per share. Or if you're more of a technical trader, obviously I am, so I have MACD still here. But you also want to typically see a rising earnings per share as well, indicating the company is growing their earnings and expected to continue to grow their earnings at least 12 months down the road. So if you wanted to change that and put the earnings per share on the chart, all you have to do is tap on the little gear in the upper left-hand corner, come down to the lower indicator, and select earnings per share. Then we'll go back, maximize it here. Maximize it here. So over the course of the last 1 year, once again, nice steady rise in price from bottom left to upper right. Nice steady rise in earnings per share from bottom left to upper right, just like a stair-step pattern. That's as hard as we really need to make it. Now, if you are not, or if you've been in the markets for a long time, you have your favorite charts set up, you like looking at different technical indicators, by all means, you could definitely put that on to make sure it passes your personal check. But if you're new to the markets or just getting started, just simply going off of those two factors alone and keeping in mind the market timing, could be a good place to start, if not, the best place to start there. So that's why keep it simple. Look for those two things, and that will get you on the right track to finding winning candidates here. So we've gone over Exxon. Let's go back, take a look at the next one just by simply swiping to the right. Chevron. Chevron has good long-term potential, has less risk associated with the stock. You're in a steady uptrend, not as strong as what we saw with the last one, but still a nice steady uptrend. So overall, stock is definitely favorable. We scroll down, the stock is currently fairly valued with the price of 175, the value at 192. It's within 10% of that value, so we would consider that to be fairly valued. But then looking at the dividend information, we can see the dividend is currently at $5.68, so $5.68 per share over the course of 12 months. Therefore, dividend yields 3.325% so far. Dividend safety a little bit better than what we saw with Exxon at 63. Dividend growth also a little bit better than with Exxon, or than with what we saw with Exxon at 11%. So this one, not as strong of a performer from a technical standpoint. Talking about RT, it is in a slower uptrend than what we were seeing with Exxon, but at the same time, the dividend is a little bit juicier than what we were seeing there as well. So, you have to balance the cost, the reward or the risk to reward profile and make sure that it meets your goals for your own investing as well. If we go take a look at the chart, similar situation over the course of the 1 year, nice steady rise from bottom left to upper right. Also looking at earnings, a nice stair-step pattern from bottom left to upper right. Exactly what you want to see when looking for winning candidates once again. As I stated a second ago, keep it simple. You can add on all your different technical analysis if you want, but just by going off of these two things can really help simplify your investing, simplify what you're looking for, reduce the time it takes to manage your portfolio. Just makes it easier overall on an individual, to take control of your own portfolio performance there. All right, so getting out of here, one of the cool things about VectorVest is the fact that you can use rank analysis on pretty much anything, anywhere, at any time. So if we go by the rank by at the top, you get a few different indicators that you can use. But since we're talking about dividends today, where we're set right now to VST. VST is great for the underlying stock, but since we're talking about dividends, we want to focus on that dividend aspect specifically. So therefore, YSG is the dividend equivalent of the VST for the individual stock. So for YSG, you're looking at a combination of yield, safety, and growth, and it's cast on a scale of 0 to 2. So the higher the YSG factor, the better the dividend is going to be. So what we're looking at, as you noticed, changes that list drastically from what we were seeing previously. So we get T row price coming up as number 1. Looking at the analysis, the stock still has good long-term potential. It still has less risk compared to the average stock out there. However, it's not been in an uptrend for quite some time. It has been getting beaten up with the overall market. It's a good stock because it has good fundamentals, just the technicals are off a little bit. But let's go take a look at that dividend information. Real quick, stock is undervalued. Just want to make sure we point that out. And looking at the dividend information, it pays a $4.80 dividend per share over the course of 12 months. Dividend yield almost to that 4% marker there. Dividend safety at 74, a lot better than what we were seeing with Exxon and Chevron. And then the dividend growth, 15% a year. So really strong dividend growth. And remember, any one of these stocks that you see in this list here today has been increasing their dividends for at minimum 25 years consistently. So there's not that risk that you see with, the stocks that pay that 10, 20% dividend that could potentially stop that dividend next quarter even, or next month even. There's not that need for those high dividend yields because they're not trying to entice investors. It's just an added benefit to help you generate some income, especially, through these rough markets. So it can add that nice cushion that a lot of people may be looking for here. So get out of there, go take a look at the next one, ORI. This one, average long-term potential, but does have really good safety. It is in a slight decline, better than what we saw with T row price. Overall, the stock is still favorable. Looking at it though, this is our first overvalued stock that we've looked at here today. Looking at the dividend information, dividend yield just shy of that 4% mark at 3.94%. Dividend safety, 75. Dividend growth, 10%. Overall, the YSG factor at 1.24 is above that level of 1, indicating that this is a solid dividend play here. So if we go back out, go take a look at some of the other aspects that we could have, or other sorting features or rank analysis tools that we can use. So if you're looking specifically for dividend yield, the stocks with the highest yield, all of a sudden you just tap on dividend yield and it brings the highest dividend yields to the top. I see WorldCom USA coming in as a new subscriber. Welcome to the VV Nation, WorldCom. Glad to have you here today. So if you notice, instead of having to click on each one and having to go through the breakdowns of everything, if you sort, once you change that rank by, you'll notice the right-hand column does change to give you the information you're looking for quickly and easily. So Enbridge comes up with our highest dividend yield out of all the DRIP 25 plus stocks with a 5.8% dividend. UHT 5.4, MCY 5.23. Now, with a higher yield, typically you're going to get a little bit more risk involved with the stock. So let's go take a look, see if that holds true for ENB, for example. So ENB, good long-term potential with the RV above 1, but look at that safety factor. RS is at 0.92, indicating that there is more risk associated with this stock compared to the average stock out there. The higher the yield typically means the more risk you're having to take on. So looking at the timing though, the stock is in a short-term uptrend, which is definitely a positive sign. So overall, the stock is favorable. Go take a look at the dividend information, however. Once again, dividend yield is 5.8%, which is $2.69 a year annualized out for the dividend per share. Dividend safety, 30. On a scale of 1 to 99, that's below that level of 50, which would roughly be about middle territory or that level of 1. So the dividend safety is a little bit of a cause for concern, meaning that there could be potential changes in that dividend as that stock moves forward. Also, looking at the price is over its value, meaning the stock is overvalued. So you're paying a premium to own this stock right now. You are getting a higher yield, but it does come with more risk associated with that yield. So be careful if you're looking for consistency, if you're looking for, just the best potential dividend play out there. Once again, stick with V or YSG. Make it simple for yourself. It'll help simplify a lot for you. But let's say you are just focused more on that safety factor. You want to make sure that's a guaranteed or as close to guaranteed as possible for that dividend to come in every quarter. So what we do, go to dividend safety, DS. Looking at it here, WST has the highest dividend safety out of all the lists at 98. On a scale of 1 to 99, that's pretty much next to perfect. So can't really go wrong with that one. But then look at the rating. It has a sell rating. Let's go ahead and take a look at the information. Stock has good long-term potential. It's good fundamentals, but it has been beaten up pretty bad with the overall market conditions, and the timing is definitely reflecting that. So therefore, be extremely cautious with this one. If you're not already into it and you want to add it because of that dividend safety aspect of it, then just make sure to wait for that timing to pick back up and use that as a new intro or new entry for yourself there. Appreciate that, Drew. But then looking at the dividend information real quick, we can see the dividend is only 72 cents a year per share over or annualized out. That equates to the dividend yield of 0.23%. So while the dividend is consistent, it is an extremely small dividend. So therefore, not really supplementing a lot here with that one. So take that into account, and that's why we're going over these different aspects and going over these different types of stocks that still have that drip 25 plus association there to make sure that you guys see this information, so that way you can use that to mold it to your own investing goals here. That way you get exactly what you're looking for every single time. So we did dividend safety. Let's go ahead, take a look at dividend growth, since that's the last one we have here. And after this, we'll go ahead, dive into the stocks that you guys want to take a look at. So looking at dividend growth, CTAS comes in with the highest dividend growth at 16%. Lowe's 15%, Sherwin-Williams another 15%, T-Rowe coming in at 15%. So seeing a lot of strong dividend growth stocks here. If we go take a look at the analysis, first one that comes up, good long-term potential, less risk associated with it. The timing is a little bit iffy since it is pretty much right at that level of 1, but overall it's a good stock. If we go take a look at the dividend information, looking at it, it pays a $3.80 dividend per share over the course of 12 months. The dividend yield is just shy of 1%. Dividend safety 86, so that's pretty solid there. And then once again, the highest dividend growth at 16%. So looks really solid there. And one last thing I want to get into before we jump into your guys' stocks. If you have any questions about any of these indicators that you see here, as always, right above that, you see that little blue stock analysis report. Tap on that. You can find this report on any stock out there at any time. This is basically a written out, detailed version of what we just were looking at. So if we scroll down, come past that stuff, getting into the dividend information, you can see dividend growth. It gives you the definition, a little bit about it. All of that can be found here. Dividend safety. So CTAS, for example, has a dividend safety of 86, which is excellent on a scale of 0 to 99. Stocks with DS values above 75 typically have RS values well above 1 and earnings yield levels that are much higher than dividend yield. So gives you as clear-cut information as you could possibly find out there, and doesn't leave you guessing on what everything is looking at or what it means or what is a good value, what's not a good value. Everything that you need to know is all summarized in these reports. And once again, you can pull this up on any stock out there at any given time. So take advantage of this because it's really a powerful tool to help you get familiarized with the indicators and what to look for, especially if you're new here at VectorVest. So with that, on that note, let's go ahead, jump into our fan favorite. We'll analyze any stock that you guys want to take a look at in less than 10 seconds. So if you guys have stocks you want to see, make sure to type them into the chat, and we'll go ahead and get those analyzed for you guys here today. Tom, CVE. So as always, we'll tap on the magnifying glass in the upper right. Type in CVE. Looking at CVE, good long-term potential, less risk associated with it, really strong short-term uptrend. Overall, the stock is favorable. Going to look at the extra information, the stock is still undervalued. It does pay a 33-cent dividend a year, which is roughly about 1 1/3%. Dividend safety above that level of 75, which is what we look for at 78. So that's strong. Dividend growth, 21%. Really strong performer here. Of course, I'll take a look at that one, Jay. So GameStop had earnings yesterday, missed earnings or earnings per share, beat sales. But you know, as a company that is transforming or making a transition from a brick and mortar to a e-commerce technology company, you're expected to see these types of growth plays, you know, spending money on turning the company around. So yeah, the earnings per share was lower because they were burning cash, but on a positive note with that, listening to Matt Furlong in the earnings call, he did mention, or he made a quick comment about how the transformation is coming to an end and they still have $1 billion of cash on hand. So that cash burn that some of these analysts are extremely worried about should slow down, and there should be coming to an end because that transformation is pretty much done. And so there should be a lot of news coming out in the very near future. Right now, it is up over 7%. Compare that to Netflix, folks. Netflix missed earnings and dropped, 35, 40%? Target dropped 30, 40% off of missing earnings. GameStop's missing earnings but beat sales. Stock is up 7% currently. So yeah, looking at it though, it is a risky, or it is a speculative play. You have poor long-term potential. You do have a lot of risk with it because you are taking a little bit, or that risk involved with, betting that that transformation will come or will be profitable for him. Short term, it is in a slight decline currently. Overall, the stock is not favorable, but we're definitely seeing some positive signs. If you're wanting to jump on board, keep an eye on RT. Let's see. CCJ. Poor long-term potential. Does have more risk associated with it. You are pretty much moving sideways on a short-term basis. Overall, the stock is not favorable currently. AVLR. Poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable here. GDXU. Let's go see that one. GDXU. Since it's an ETF, the RV and RS are always going to be pegged at 1. Therefore, your only focus with an ETF is RT. 0.37, that tells us this ETF is in a steady decline. Therefore, it is not favorable. Even being up 11, almost 12% here today, still is not favorable. DE, good long-term potential, but does have more risk associated with it. You have been in a steady decline. Overall, the stock's slightly better than average. But with that timing below 1, tells us right now is not the time to be long in it. AMD, good long-term potential, less risk associated with it. And finally, after a 6-month decline, RT is finally back above that level of 1, indicating a short-term uptrend in the stock. Therefore, the stock is favorable here. GEVO, poor long-term potential, a lot of risk. However, it is in a short-term uptrend, so overall the stock's about average. It's a speculative play, a momentum play. If you're a momentum trader, great, take advantage of it. But if not, probably stay away from it. Let's see. Win. Good long-term potential, less risk associated with it. However, it is in a steady decline, so overall stock is about average, slightly better than average currently. Tesla, TSLA, good long-term potential, less risk associated with it. However, even with this pop off of this most recent low, you are still in a short-term downtrend. Overall, it's a good stock, but you do need to see that timing change. CDEV. There we go. CDEV, good long-term potential, but more risk associated with that potential. You are in a strong uptrend on a short-term basis. So overall, stock is favorable here. Let's see. NVIDIA. Oh, Rio. Okay, sorry, I missed that one. RIO, good long-term potential, but does have more risk associated with it. You're in a slight uptrend. Typically, I want to see it at 1.1 or greater. So I'd be a little careful with that. Overall, it's a good stock, but I do want to see that RT continue to improve. Looking at the analysis of it though, you are getting an undervalued stock here, so you are paying a discount on it right now, or getting a discount on it. Looking at the dividends, $7.92 per year, which is equivalent of $10 or 10.5%. Dividend safety though, this is why you have such a high dividend yield. Dividend safety at 44 tells us there is more risk associated with that dividend. 18% growth. Looking at the RS below that level of 1 tells you be very careful. Thank you there, Sharon. Glad to have you here today. Glad to see you as well. So yeah, that does give us a little bit of hesitation with it because it is a riskier stock. It's more of an aggressive stock. There is more risk associated with it, so therefore that dividend has to be more attractive to get people to invest in a riskier, more aggressive play there, especially if you're going for dividends. LPX, good long-term potential, less risk associated with it, really strong short-term uptrend. Overall, stock is favorable. Any dividend information? Yeah, so the dividend, 88 cents a share per year, equivalent to 1.25%. Dividend safety, 81, really strong dividend, 13% dividend growth a year, not bad. IPI, good long-term potential, about average risk associated with it. You're in a really strong decline currently. Overall, stock is about average. I'd be careful though with that timing. SJT, good long-term potential, but does have a little bit more risk associated with it. You're in a really strong short-term uptrend. Overall, stock is definitely favorable. Coming down, 6.3% dividend yield. However, that dividend yield or that dividend is risky because the dividend safety is at 42, telling us there's more risk associated with potentially seeing a dividend decrease or seeing that dividend be given up there. All right, so good long-term potential at Google. You have less risk associated with it. However, the timing is the big issue. 0.84 tells us it is in a steady decline. Overall, it's a good stock, but not the right time to be long in it. Energy fuels, good long-term potential, but does have a lot of risk associated with it. You're in a steady decline on a short-term basis. So overall, the stock is not favorable here. ARCH, good long-term potential, but more risk associated with that potential. You are in a steady uptrend on a short-term basis, so overall, stock is favorable. Apps, good long-term potential, but and a little less risk compared to the average stock out there. However, the timing has been the big crusher with this one. Overall, good fundamentals, so good stock, just not the right time to be long in it. SCHD. So SCHD ETF timing at 1.07. It is in a slight uptrend on a short-term basis. Overall favorable. Looking at the dividend information, dividend yield 2.9%, just shy of that 3% mark. Dividend safety is a little bit riskier at 58. So be careful with that aspect of it. OILU. RT at 1.87, really strong short-term uptrend. So overall, stock is definitely favorable. STLD, good long-term potential, less risk associated with it. You're in a steady short-term uptrend. So overall, stock is definitely favorable here. Let's see, ZIM. So I had a few people requesting ZIM. So ZIM, good long-term potential, but does have more risk associated with it. You are in a strong short-term uptrend, so overall stock is favorable. Let's go take a look. Now, this is going to be a little biased or skewed because of this one-time special dividend that everybody's been talking about for a while. But the dividend, $19.50, equivalent roughly almost 30% dividend yield. But that dividend safety is at 41, telling us while that was a one-time dividend, it is it does have a strong dividend, but there is a lot of risk associated with that dividend, and one-time dividends could easily go away. They're not permanent, so be careful with that one. We looked at T-Row a little bit ago there, Patrick, so you should be able to go back in the VOD and take a look at that there. AOSL, we talked about T-Row quite a lot actually. So AOSL, good long-term potential, less risk associated with it. However, You are in a short-term downtrend, so overall the stock is favorable, but you need to see timing pick back up. Can I run this on Windows, or do I need this on the app or Android? So Jim, VectorVest 7 can be ran on Windows. What we're looking at here every single week with our mobile coaching session is the mobile app. So this won't run on Windows, but everything that you see here in the app, if you have the desktop, all of this is included plus more. So you would be able to do all of this on the VectorVest 7 platform as well. All right, let's go take a look at the next SCCO. Good long-term potential, but does have more risk associated with it. You're in a steady decline, so overall the stock is about average here. Extra, go ahead and take a look. So Extra, poor long-term potential, a lot of risk. It is a speculative play. However, the RT has finally crossed above that level of 1, indicating the trend, short-term trend is now back to up. Not really strong enough for my personal liking. Would like to see that pick up a little bit more. But overall, stock is not favorable. That uptrend is not offsetting the amount of risk involved in the speculative play currently. All right, think we're getting close to answering all of them. ADBE. So we'll do 2 more here. So Adobe, good long-term potential. It has less risk associated with it. Timing is the issue with this one. At 0.92, it is in a slight decline on a short-term basis. Overall, it's a good stock. We need to see that timing pick back up, though. AAPL, and then we'll do one last one after this one. So Apple, good long-term potential, less risk associated with it. However, once again, timing is the issue. At 0.94, it is in a steady short-term decline. So be careful with that. Overall, it's a good stock. Just need to see that timing pick up. And then last but not least, VET. VET, good long-term potential, but does have more risk associated with that potential. It is in a really strong short-term uptrend. Overall, the stock is definitely favorable here. All right, so with that, let's go ahead and take a look at what's going on in the market still at this point. Now that we've given the market some time to develop here, we are still 1 tick into the green. Therefore, the market is mildly bullish, and VectorVest advocates caution when buying stocks at this time. If we scroll down, we still have that 1 green light coming from the price column. RT still remains about flat from where we saw it at. However, buy to sell ratio is picking up a little bit here. MTI, if I recall correctly, is also picking up a little bit here. Looking at the advanced declines, this is what we were wanting to see. Once again, whenever looking at advanced declines on a daily basis to see if it's a good day to buy or a good day to sell short or play the market to the downside, you want to see a 2-to-1 bias. Right now, we have that 2-to-1 bias. There's 64% of stocks moving higher and about 25% of stocks moving lower, clearly meeting that 2-to-1 bias we're looking for. This tells us the reason why we look for that 2-to-1 bias is because if we have that and you're buying a stock here today, that tells us the probability is in our favor that that stock is continuing to move higher along with the market. So therefore, it's all about putting the odds in your favor. Looking at the major indices, the Dow is basically flat. The NASDAQ is up now over 1%. S&P finally turning into positive territory, now up about 1/3%. VectorVest Composite up over 1% here as well here today. Bob, email is patrickf@vectorvest.com. So hopefully that helps you out. All right, so on that, it's been my pleasure being with you here today. Thank you all for tuning in here today. Once again, next week we have hopefully we have a pretty interesting stream to go over. A lot of new things to show you guys, hopefully. I'm not going to get into too many details. Don't want to spoil it, but I really look forward to next week. So hopefully you guys will tune in with me here and check out some of the new stuff that we have planned here for the mobile app. All right, so on that, as well, Glenn Tompkins does have his Trending Thursdays today. He is back in the office. If you weren't here for yesterday's stream, he is back in the office. So make sure to come back around 2 p.m. as he kicks off his Trending Thursday. Talks about what's hot, what's not, what news is driving the markets, and what you need to be focused on here. So now that we've covered all that, thank you all for tuning in. Have a great rest of your trading day. Have a great weekend. Be safe out there. And until next time, toodles.